Well, okay, today is March 30th, 2015. This is Michael Douville with Realty Executives here in Scottsdale, Arizona. A couple things I want to talk to today. First, I have to get my disclaimer. I am not a licensed stock or bond broker, nor am I a licensed financial advisor. I am, however, a real estate broker here in Arizona, and I've been so for many, many years. And reasonably well versed in investments, and these are things that I've done myself. So anything that I mentioned here, this is something that I've done. It's not a reflection on anybody else. So if you decide to that some of these thoughts might be pertain to you, you really should talk to your significant other. Make sure that you're on the same page. Talk to your financial advisor. You're always welcome to give me a call here, and we can discuss and brainstorm whatever it is that we might be thinking of. And let you know that these are for educational purposes and not for financial information. So now we have that disclaimer done. A couple things I've been talking about in the recent 2, 3, 4, 5 weeks. It's really been going on for probably 6 or 8 months. I have advised my clients to take a third of their portfolio off the market. Anything that was marginal, anything that they didn't like, anything that if you had huge profits, it was time to ring the cash register and take some profits. We're still in the real estate market, but we've reduced our portfolio size. And I'm advising that in the stock and bond market as well. It would be prudent. I mean, there's been huge profits made. And of course, there's a divergence going on. The S&P just keeps going up higher and higher and higher. We've got a huge day in the stock market today. I think the Dow's up almost 300 points. It was down almost 300 points last week. It's up almost 300 points today. The S&P is at 2085, 2086, 2087. Trying to push back into that 2100 territory. However, each and every day that goes by, we get a warning on the economy that the earnings are dropping, that the retail markets are dropping, that wholesale prices are dropping. So to me, it feels like a recession. Now, I've done some homework on this, and I want you to do your homework as well. If you just go into Google and just take a look at some of the things, it says anatomy of a bubble. Most of these bubbles are pretty much the same. There's several phases to it. The first phase is stealth phase, and that's when hardly anyone really knows what's going on. There's been a subtle change. That's when the smart money recognizes the fact that money is going to move into this area because something has changed. Then you go into the awareness phase. Awareness phases was that, okay, people are starting to get the idea that, yes, very similar to like what happened in 2009 in the stock market. 2009, why nobody wanted to go in. They just been burned very badly. And so they swore off the stock market, never going to go do that again. And then come 2010, people started getting the feeling like maybe they should start getting in. By 2012, you had the awareness phase was well underway. Everybody, the bad times were behind us, things were going along really well. And they started getting into the mania phase, and I think we're well into that mania phase right now where things are just absolutely terrific. We've had some tremendous wind at the sails from all the central banks around the world. Everybody is buying. I think that everyone knows that the central banks are actually into the markets buying equities. And they've just run these prices up. However, there's been a sizable shift here as the prices keep going up, but the economy seems to be going down, and we've got a pretty big void between where the stock market is and where the revenues are. So they seem to be dropping. That's called the mania phase, and it goes right into the blow-off phase. So for me, I'm not an expert in any of this, but it made a lot of sense to me. Is that we've had really good run-ups. Most people aren't going to get in at the bottom. They're going to get in at the beginning phase. If they get into the beginning phase, they've done really, really well. But it's that mania phase, and then right afterwards the blow-off phase, and they all do the same. If one keeps thinking back about all the market problems we've had, prudent would be to take your profits. Prudent would be to switch into a different asset class. If what I think is coming actually comes, you're going to want some income. Income is going to go into several asset classes, but the one I think is going to be best is going to be the real estate asset class, and you can get income. You can get anywhere from just a single family home in the low single digits, but it's safe, conservative, easy to finance into some retail complexes, into some metal complexes, things that are very, very safe but still earn 6, 7, 8 maybe 9% return. And then, of course, we've talked about, we have some financing strategies to it. But what I'd like you to think is that change from one asset class to another asset class. I think the stock and bond market have just been priced for perfection. There's been huge, enormous profits. Take your profits. Don't wait till that blow-off phase that comes along. You have to think to yourself, how much more does it need to do to make me happy? People have had enormous returns on their investments. Take a third off the table, and then talk to your advisor. See what might be best. But my suggestion is to change that into an asset class like real estate, because real estate, we're nowhere near it. We've just come out of the stealth phase, where we had a blow-off in everyone remembers that, 2008, 2009. People swore they're never going to get into the real estate business. A lot of people couldn't get into it because they've been prohibited by short sales and by foreclosures. So we're just now into the awareness phase. I think what we're approaching is just we might have a slight correction coming our way, but that'd be a correction in the ongoing bull market. And keep in mind that our cycles are really, really long, so I think that we have probably one of the greatest real estate cycles coming in our lifetimes. In my lifetimes, I've seen some pretty good ones, but I think I have even the best coming that there ever was, and I think it's going to be just enormous. But in the meantime, you might have some tough sledding, so I would opt for being safe and get into a nice, safe, stable asset class like residential rentals. People need a place to live, and this will just give you safe, dependable monthly income. So I'm going to try and put a chart on the bottom of this, and my phone numbers. You're welcome to call me with any of your thoughts, and as like always, I'm always answer my phone. Good luck to you. My best.